Welcome back to the floor of the CMZ Group here in Chicago. Wednesday, July 20th. I'm Killer from Treasure Curve. Got cash? I can't help. Get me at The Killer on my Twitter account or comment here in this video. Let's look at this markets, folks. It's time to get back into the CMZ zone. So here we go. We're seeing great volatility in these markets. We've talked about this. We saw a dramatic move yesterday. You know, we talked about this default risk. And actually, I was on CNBC Fast Money last Thursday. Hopefully, got an opportunity to see it. But Karen and I were actually talking about this default risk. My personal opinion is that we are not going to default. Obviously, yesterday we saw that the gang is 6, that they're probably going to come to this resolvement. So we saw that default risk come out of the Treasury market. They came in and grabbed it. A counterintuitive move. We saw the stocks go up yesterday. We saw the Treasury. But why did the Treasuries go up? Let me know. Let me know your thoughts are. My personal thoughts are that every corporation out there, every hedge fund, every pension plan, everyone holding this AAA rated paper, they invest in these AAA rated issues due to the fact they have compliance. They have investment guidelines supplied to them. Therefore, in the event there was a downgrade in the U.S. government rating from AAA to AA, the scare out there that there's potential forced selling of this paper. We actually didn't see it that way. We actually saw if there is a default, they're going to be buying treasuries even more aggressively than they currently are. So either way, default or not, that was the conversation last week that we're going to see this treasury price continue. Right now we're seeing the 10-year off a little bit in price. The yields come back above that 290, but nonetheless, we are still beneath 3%. I think that's an imperative signal in the market that all this Eurozone stress, all the situation, we have not got out of there's going to be a long time. Those problems are going to persist long past the August 2nd deadline. You know, we're seeing in the Treasury right now, I did tweet this morning that 124.16.5 has a nice initial support. I tweeted that out. That is currently the low. We'll see if that holds today. You know, we saw them come and grab those Treasuries on Monday, a high of 127.02. Pretty sensational move. Hopefully you're able to capitalize on this volatility. It's pretty thin. It's pretty fast. You know, the S&P talked a long time about this killer target to the downside, this 1293. Finally got fulfilled, folks. You had to be patient here. We came down, made a new low of 1291.25 on Monday. Fulfilled the target. Now come back up, and I really like to see this killer magnet back at 1338. We're going to see a band here. We're going to see continued chop, continued volatility until more certainty is shed into the market. Currently, the euro currency. You know, the euro currency is just feeding directly off the dollar index. Dollar index low over here tonight is 75.03. At 75 level is a little bit troublesome. Therefore, we continue to see a bid in the euro currency, and it's kind of stuck on this 140 level. It's a huge level over there. Crude oil, you know, it continues to flirt the $100 level. Right now, it's trying 98.5 and whatnot. And gold, that's been the big move here, folks. We saw them come and grab that new all-time contract high of 1610. Come off 1600 since then. We'll see if some more fear persists. We got a lot of economic data continue to come out in the market. So tomorrow I'll be back on the CMZ. I hope you're able to tune in. And one other thing, please remember for the rest of the day, be the hammer, not the nail.
Hey, bring it back, bring it back. Now double your money and make it stack. I'm on to the next one, on to the next one.